How did we get to the point where we're just narrowly dodging a bear market in these shares?
It's incredible how fast sentiment has turned. I mean, we went from unabashedly bullish to really kind of skepticism, and now pessimism is really pervasive. You spoke about geopolitical tensions. That's very front of mind for international funds. A lot of them actually didn't add to their China allocations. They were underweight China going into the reopening trade and throughout. But now we also have the deteriorating economic picture. You know, that China reopening story, not quite as much of a consumer spending boom as many had hoped. I was actually in Shanghai over the weekend, and you did see a little bit of that on the ground. But also, let's not forget that there are more attractive markets here in Asia. You know, you see Japanese equities doing incredibly well. We're looking also at the Kospi, almost at a record. In India, there's been almost a reallocation out of China. People gave up on that story and said, hey, if we're investing in EM, if we're investing in Asia, there are better opportunities out there.
So let's say that this current rally we're seeing today doesn't hold, and we do eventually get a bear market in the coming days. What would that mean for Chinese stocks? What would that mean for the region overall, should we pass that psychological barrier?
Danny, there was a note that Bank of America's strategist published yesterday, and I love what they're saying. This market is too cheap to short and too mediocre to go long. And that's really, we're kind of in the middle of that for Chinese equities. We do need a catalyst for this market to turn around because sentiment is so poor. It's a very emotional market right now. That catalyst could come out of Beijing. If we do get kind of a stimulus push, so far policymakers have been kind of all talk and not much action. Maybe Rebecca, your next guest, could talk a little bit more about that. But you know, any kind of indication that they're listening and they're looking at what the economy is doing, any thawing of tensions between the US and China, that doesn't look to be forthcoming anytime soon. But what it means for the rest of the region, if we do get a reallocation of capital, it could actually be good for specific markets, alternatives like India and South Korea and even Singapore. But you know, let's not forget that China is a big heavyweight in the MSCI Asia Pacific indexes, so any kind of underperformance will drag that index lower as well.